Good afternoon, everyone, and welcome to Monday, December 15th, 2025, Trading Trends ETF edition. Let's get right into it. Let's recap the day. It was an interesting day, as usual. Pretty good volume as well. We'll go into the doc and see exactly what is going on the day. All right. So today, a bad software day. That was led by ServiceNow. ServiceNow had a very ugly day. Bitcoin also they took out. We talked about that Friday. I believe it was Friday. We talked about the chart of Bitcoin. It looks sick. It does not look well. And today, a bad move, down 5%. Ethereum has been holding in a bit, but definitely not a lot of enthusiasm for Bitcoin today. And Chinese tech drop. I've been looking closely at emerging markets at China. Today, Chinese tech did give a tell in the form of KWEB, a pretty ugly day. We'll look at all these meaningful charts, but silver and healthcare, no one told them. Silver continues to rally. And healthcare, very strong. Some portfolio moves. I bought a biotech ETF today. And I actually, as I said I would last week, I got out of many longs just tactically for right now with where the market is. I see curb enthusiasm until about right when that Santa Claus rally is supposed to start. I know seasonally, we typically uptick right here. If you look at the past 20 years in the seasonality chart of SPY, it ticks up literally right today. But if you look at the Santa Claus rally, that begins right around Christmas time, truly Christmas Eve. And you're supposed to get 5 nice up days to end the year. Silver and healthcare rally. We'll look at the charts and we'll give more context to that. New all-time highs for financials. It doesn't even matter where you slice it, what part of the financials, or whether they come from Europe, the United States, Canada, Italy, Spain. Things are very good for banks globally. They're just getting lean. Money is cheap. So there's a couple of different reasons. But again, so financials, that's ETHA, Europe, all-time highs, XLY, consumer discretionary, new all-time highs for these guys, helped by Tesla. Tesla, a ridiculous day on reports that they're really taking a big step ahead with driverless cars, a big step over the weekend and such. So a big day. I think Tesla was up 4%. We'll look in the panel in a second. Japan, all-time highs. The banks through more of a different breakup than XLF. This is the KBWB, has more regionals, and you have your Comerica's, American Expresses, etc. And then, like I said, EUFN is European Financial. So let us get to the dashboard panel very quickly here. Hopefully you guys are all having fun and success trading. Let me go bang. Go Birds. Yes, we did just beat the Raiders. Probably the worst team in football, but a win's a win. Tesla up 3.5% is where they ended up closing it. Still a very decent day. It was up higher. It touched 482 essentially. SPY, we'll look at that in a second, down 15 bips. Q's had a little bit worse, down 50. IBIT, which had an amazing week last week into new highs, was down 0.75%. Broadcom, this is what let me know there's a lid on this market still. They're still a little bit nervous on the AI trade, on the ROI of AI. I'm going to put more acronyms in there, but Broadcom down 6% today, or 5.5% at the close. Yes, it's had a ridiculous year, up 48%, but that trade has a little bit of air coming out of it. Also, a portfolio move. I was proud of myself for going long. Rigetti, the whole space looks like it. Short-term topped in October, and I got into a short of Rigetti. That quantum computing space, similar to Bitcoin, and they are correlated in terms of returns and kind of in usage, or how the algos kind of find trades like that. They both topped out in October. Lets me know that that's not done yet. We'll take a look at crypto specifically. Apple and Ugly down 1.5%. They did not like tech today. Oracle down 3%. You always can look for a temperature, like seeing a sick kid. Look at Oracle and Broadcom right now. Broadcom more short term. Oracle really, because that's tied and linked with the CDS prices in terms of sentiment. So I look at Oracle, Broadcom. That's an easy way to almost cheat and see what the market's doing. Amazon and Tesla went in totally different ways. Today, Amazon down 1.5%. Tesla, because the monster it was today, up 3.5%. Still pulled XLY to new all-time highs. AMD down 1.5%. Micron ended up selling that. They're not all gains. Ended up selling Micron for a small loss. Palantir, a small gain, and ended up getting in. Pfizer, my call spread, that worked out for I believe, a 20% gain. And then I put that capital into the biotech ETF because I do like that space. And healthcare, again, a nice day. So as we zoom out here, this was the intraday chart of SPY. Yes, you should be seeing that. So here was the opening. They really did not like this from the get-go. We opened at around 686. I'm simplifying, but that was very close to the prior all-time highs. If you remember, the actual all-time highs in SPY for now was Thursday night, the 2nd. The market digested those Broadcom earnings before they really talked about the ROI essentially. And Broadcom went to all-time highs, 440. That's when SPY put in, if you look at the chart, it's right here actually. Right there, we put in that 691, 4:30 p.m. That's the highest point in human history. We're trying to get back to that in the next, week, 2 weeks. But that is what happened, and then we quickly gave it away. And this was a lot of reason for Broadcom. And today, honestly, not so different. You can see here, this was from a 9:30 hour, and boom, they had an 11:30 jump. I know a lot of people blame it on Jane Street and high frequency. They dump in the morning, and then they have it basically after the euro close, have us rally into it. Today, very similar. 9:30 opens, boom, dump, and hence you see a proliferation of these ETFs that basically skip the overnight, and then you own it, say, from afternoon or after 3:30 p.m., etc. As we strengthen and you get closer to this orange line, which is volume weighted average price. So I was looking at today's tape, and I'll go short term first. But yeah, so they sold us to a bottom at around 679, and we tussled with it several times all the way till about 1:30 p.m. Your VWAP was up here at 681.34, and we tried to get close to at the end of the day. Even is your closing price for SPY. As I zoom out here, like I said, I do not see. To me, this looks very for this reason right here. This chart looks clean to me. I just see reduced demand for the next about 2 weeks here for SPY, but understand I see us hanging in right around that 680 level. If things get ugly, you'll probably drop to that 655, and I love the bull stand that they've had here, honestly, going back to mid-September, once that first hammer was put in at that 650 level. I think that's it. Barring the crash that we'll have probably in 2029 or something. I think those levels will not be touched for quite a while. So I like your entries anchored to that spot, to this 650 floor, which I believe will still hold in these next 2 weeks. So understand, like I said, we're going to be somewhat straddled to 680. There are events this week. You got a report tomorrow, a jobs number, and then I think you have a CPI on Thursday. Things can move, and of course, just a regular macro out of this air coming out of the AI trade. But look at the top. Again, SPY, the actual intraday all-time high was still on the 29th because we don't count that 4:30 p.m. spike when we got to 691. So this looks like choppy action to me in terms of we're still range bound from the end of October between 690 and 650 with a very strong floor at 650. And so like I said, next 2 weeks, we're going to look at some areas here. So you'll see what areas really get weaker and which get stronger. Healthcare is looking like a bull, but other stuff like quantum, Bitcoin do not look well. So let's get into it. That's pretty much it about SPY. So I think we hang in here. I think it's going to frustrate people. You're going to a small increase in volatility, probably 6% over the next 12 to 15 days, and that'll signal the end of this digestion period of a move. Like I said, I don't think this breaks. If it does, more weakness ahead, but probably only down to that 620 level of your 200-day moving average. So things look strong. They are still bidding it more than selling it, as you see RSI above 50 here, as it's been since the 2 days before Thanksgiving, November 24th here. So still overall a strong market. Let's get into some individual movers here, some stuff that really, really moved today. I'm looking at silver. Silver continues to move. We're going through multiple standard deviation moves here. The biggest, most noticeable absolute terms of moves of the market, and silver today up 3.5%. If you remember, this topped or peaked short term on the 12th at 58.56. And boy, here it is again, 58. This is very similar to the period we had here at the end of September, going into mid-October, when we have this weeks and weeks of overbought RSI. So at some point, basically the same thing happened here. October 16th, it peaked, and then it gave back a significant amount, 49 down to 42. Actually wasn't horrendous, but 7 points on a $49 stock is not nothing. It's like 17% off the top of my head. And then it continued that rally to the level, that former breakout, and etc. So what I think is very likely to happen here, let me pull up my chart here on a different monitor, a different time frame, because markets are fractal. I just don't, yes, the chart looks amazing. Obviously it's overbought, so this can last longer. But I think this is going to set up for around a $51 to $52 entry in about 2-ish weeks. And that's where I would love to, at that point, play those double or even triple leverage ETFs, hold it for about 10 to 15 days and then get out. I think the big one for this is AGQ, I believe. And it's very liquid. I think it's like ETF of the year if you look at returns of the leverage ETFs. But this one, especially with the stochastic momentum mix as well, starting to roll over just a little bit. Trees don't grow the sky. That's had an amazing, amazing run from the breakout. of November 26th. And that to me is just a decent time for you to, maybe step off the treadmill for a second, get a drink of water, and then hop back on. That's all we're saying. I don't think the top is in by any means. And silver will continue to be a story for 2026. So allocate appropriately. But like I said, I do not want to chase this. To be frank, nowhere near north of 55. This looks extended. I might be wrong for a day, 2 days, but I do think this will come down. It looks like to me it wants to get to 52. 49 would be very aggressive. I don't think that's going to happen. And that's it for silver. A big day today, though. They're still loving it, up 3.5%. Let's look at something I did participate in. The market, like I said, Qs were down 50 bips, SPY down 15, vol up a hair, about 15 bips. Healthcare, they bought it up 1.3. Healthcare looks great. I'm looking at biotech. I'm looking at different pharmaceutical ETFs. A lot of them look great right now. So hence why I did the biotech ETF today. Healthcare looks wonderful. I think this itself is setting up for a relative strength breakout. This looks like it has $159 written on it in about 2 weeks. And I know that's not a massive move from here. It is $3. But you got to understand this move started here at that hold of 150. So again, the target's 150 to about 159. Healthcare is not a massive mover. Don't forget, these are behemoth, Titanic-like stocks of Johnson & Johnson, and they're not supposed to move like their quantum computing garbage. So with the all-time highs of XLV struck also Thanksgiving week at 159, I'm basically saying we are going to overshadow that as you're seeing great rotation, breadth. Financials are the rage right now. I read about that last week. Easiest trade on the board, global financials, and healthcare is coming for it very soon. You ring a bell when you get to just about, it looks like 160. Like I said, I don't think a lot of the market, small cap was the exception that surged and a multiple standard deviation close on the outside the upper Bollinger Band. You're not seeing that kind of exuberance from a lot of the other markets. If they were there, I would point them out to you. And number 3, so they bought silver today, they bought healthcare, and they bought the United Kingdom of 1% for the UK. That is a new high on the United Kingdom, not all time. That was struck back in 2007 before the global financial crisis. But it is, every squirrel gets a nut. This is coming for that overhead. And the UK, if this data is correct, it peaked back there at $55. Right here, $43. This is a perfect example of how people maybe are not as bulled up as they should be. This chart for the United Kingdom looks great to me. Look at this area here from June 2014 with a flat 200-day moving average doing nothing essentially for 11 years. More than not, this thing was totally the epitome of value at $30 even. And now we're getting to the area of the prior breakout here at $44 with incoming going towards $54. I bet you that's a Fibonacci extension as well. Overbought for the first time in this fashion since October 2007. And that was a couple of crises ago. The United Kingdom looks great. And this is powering a lot of that EUFN. You got Barclays in here and a lot of, and several other big banks. This chart looks absolutely great. The United Kingdom, they bought it today. 1% is also seems like, give me a break, Palantir does that in a second. But for the EW, not a high average true range or volatile stock. That's actually quite a big move. I don't like entering. All that being said, I gave it a lot of flowers. All that being said, I do not. Let me go back to a 1-year view. Chart looks great on a longer term time frame, but we just zoomed out 15 years. I mean, a lot can change or build upon itself in that regard. But here, look at these beautiful breakouts too. 38 above that, and then 40, 43. I'm saying a little bit of a pattern. And then right here, look at it getting a little bit tired. It's at 44 here. So I personally don't want to chase this. I think step out of the sidelines for a lot of these charts. I'll tell you something set up like healthcare, which is why I entered that position today. But I think you're going to want to sit this one out to about 43 even in about 2 weeks. And then again, that play would get to about 44. So about, whatever that is, about 2-ish% and change. But that looks absolutely a great chart on different time frames. Again, this last thing on the UK, my gosh, maybe I should just go to London and get it over with. But this has had literally 5 closes below the 200-day, a rising 200-day moving average since February 5th. So that is an amazing track record for 10 months. There's much worse places you can be than the UK. Bad accent, I know, horrible. All right, let's look at the losers, and this is what dragged the United States down. ServiceNow, an ugly, ugly day. At the end of the day, and cybersecurity was weak as well, different areas, but this was down 11.5%. ServiceNow, I know it's not stock day for the show, but this thing's been a dog since July 31st, absolute dog. And today, I'm guessing they're losing to AI And if you log on ServiceNow, it gives you cancer, which when I used it, I did feel like was the case. So we go back to IGV, tech software down 2.5%. Look at this very, very important point. We are at the 200-day moving average, a rising 200-day moving average. Don't forget, this group of software peaked back in late September, September 23rd at $118. And then it got very close. And that's what you're kind of seeing in different charts. It got very close, October 27, 28. Don't forget, that's when the United States was super bowled up, all-time highs. It could not do it. And boy, from, I believe the phrase is from false moves come fast moves. And 118 gets sliced all the way to 105 and barely holds par at 100 here on an oversold condition. And now a monster rally to 110. And then that tennis match gets you all the way here to 105. A lot happened. Very dramatic. Going forward here, yeah, I don't like this. To me is a relative strength breakdown. I do not like the way it is behaving. This has a effect on the overall market, of course, as we are a tech, and this is specifically software, so you're not getting into the XLKs, the Microsoft, the Apples. These are specifically software like the ones we are talking about. But this looks bad. This will be in the penalty box, I believe, for the next 2 weeks with a floor of about 100. I think they hold this again, but they're going to try and flirt with it. The scary thing that the algos might sniff out is the 200-day moving average, which is now going up at 4 cents a day, will very likely stabilize and then start to go south. That is not such a great a way to find entries for longs. And also stochastic momentum getting tired relative strength in terms of where it had before, right around this 20 level from where it came at the negative, something sub 25. So I think that was a great run if you capture from 100 to 110. I think that's it. And this is headed to about, I think you could say 100, honestly, safely. So don't love software. And then going forward, it looks to be range bound, unfortunately, at 112. So I'm not so sure when these 118s, those highs, will be revisited. It's going to take much more time. And a lot of people treat Bitcoin like a software stock. And this is part of the problem. And look at that, number 2. What do you know? IBIT. Down 5% today, or 2x what happened with the software. This looks so kind of like we were saying, are we prognosticating here? So October, Bitcoin peaked 2 weeks after the chart we just looked at, software, and now it's in this purgatory. Bitcoin entered hell, as far as I'm concerned, November 4th, because that's where really it fell under 200 moving average that many people didn't think it would do for more than a few days. This is the GOAT, if you look at the asset quail of past, almost since the white paper came out, essentially averaging a double every year, which is insane. Maybe the stallion is maturing. This thing's had 3 closes all year under the 200 moving average until November 4th, and then boom, it hasn't been able to recover yet. Something that's positive is the higher lows here. I mean, I'm really trying to squint for flowers here, but 47 and then 48, and I 49 again. We were talking about this chart on Friday, and it does not look good. Whoops, 1 second. Monitor also does not look good because it just froze up on me. Uno momento, poor favor. Well, so as you can tell here, the resistance, ultimately amazing overhead. And unfortunately, the vol has left Bitcoin. You don't see a lot of volatility anymore. The candles have gotten so short in size. A lot of people are saying it's because so many folks sell upside on it, and it's so liquid now through IBIT calls, and it puts a ceiling on the price. And they do it on the CME options as well, on the actual futures, as well as through IBIT, which is super liquid to just do that on repeat. And perhaps that's the case. But you're seeing correlation with other weakness in areas similar, like quantum and things like that. So to me, this looks like clearly in the doghouse. And I guess the important question is where the floor is. This looks like it is squarely in the doghouse for the next 2 weeks. I would love to think it was different and there's going to be favor pouring in. But this looks like it wants to get to 45. I don't like the action today. To me, it was important. This 5% down move, if it holds here over the next 2 weeks, it's not good that we couldn't even get close. I mean, at least get to a 50 RSI. Some other areas like Ethereum, I think, did it. This couldn't even get. The highest this got was a 47 RSI. Then they said, no, I'm going to sell this. So for IBIT land, that's $54. And then boom, it goes to 49. I just don't like it. Clearly speaking, this looks like it's going down for the next 2 weeks to about $47. So probably in that and of itself frustrating. So again, $47 is right here where my cursor is, it's going to feel like the lows from the markets back in April. So it's not going to feel good, especially where just immense overhead here in IBIT. So a down 5% move. I think it's just kind of the beginning in terms of the redness for the next 2 weeks. And looks like it's going to be maybe revisiting a sub 35 or sub 33 RSI. But crypto, not the strength we wanted over the weekend today. And I don't think it picks up for the next 2 weeks. Lastly, in terms of the losers of the day, Chinese internet, emerging markets don't look good. They look weak. China looks super weak. So I'm talking about on Spaces last week. If you're around tomorrow at 11, join. That's on X. And I said one of the charts that would scare me to me was China. MXI looked like crapola, and it still does. There's a difference between it being range bound and breaking down. And we'll focus on KWEB for here, which peaked also in October. You're sensing a theme here of some things that I don't think they're going to go to zero, but there's definite other things in favor, like a silver, like a healthcare, like the UK, that perhaps we're not ripping to the moon in October. So here, what did we just say about software? We slipped the 200 moving average. Oh, look at this. Right to the 200 moving average, like financial analysis magic. Here's the good news, though. This did this twice on November 20th and 21st, and it bounced right back up like a, just like an amazing strength. Here we are again today. You can count on one hand the times KWEB has visited its 200 moving average since Easter, okay? And today it's flirting with it again. Today's the third time, unfortunately, in the past 3 weeks. I sniff a lot out with the 50 RSI. I do not like the weakness here in Chinese internet since Halloween. Looks very weak. The ceiling at 40 looks immense here. The 200 moving average, to be sure, is 36.43. We closed below that. I don't like this. I think this has a week close to 10 days or so. And this was like wants to go towards that. Can't believe it, but around a 35 half. So almost $1 low from here. 35 half is where my candle is, where my cursor is right here. So I'd be under those November 21st lows. Maybe eclipses and gets that oversold condition and then bounces. But don't like the upside there either. It came very close to shorting Chinese internet today, through put spread or leverage ETF or shorting a stock like Baba or Baidu, etc. But end up going the short Rigetti cloud, shorting the Rigetti idea because that space just looks absolutely like crap. But this one is not far behind. So Chinese internet down 1.7%, not good. They sold it off with software and Bitcoin today. All right. If you have a ticker or something, put it in and we'll get to it. Let's look at the top 3 trades over the past 5 days. So if you're really good at math, that's today and then the prior 4 days. So number one, not even close. Silver up 9.5%. Today was 3.5%. I'm not going to spend too much time on this because we did it in the basically the opening. I don't want to chase it here. That stat that I'm telling you, it's up 10% essentially for the past 5 days, or an average of 2% a day. Need to go sub 2%. Need these candles to get smaller. This is not so bad, but it's got to get a lot smaller in terms of the size of these candles, and then the RSI go under 70, and then you'll know that you're headed towards that $52 great level of entry. But for right now, they want to take this higher. We'll see how much it truly gets rejected off that 58.5, what they want to do for it tomorrow. But for me, this has run its course, an amazing rally base, and I base it just on the short term, right off of this low. Once it held at 45, that's a great move to 59, and that for me is it. But it's the number one trade of the past week. Let's look at this one. This has nothing, it is material, I guess. Materials. This is very interesting. The number 2 best trade on the board. That's why you always got to believe in rotation. Materials, which I'm sure everyone looks at, peaked in July at 46.43, okay? And then didn't really do a ton. Very range bound. Got to Kembe from that pretty much throughout September. And then it had a really rough period here, Halloween week. And then it barely was able to point its head above its 200 moving average on the 12th and 13th of November, and then all the way back down to 42. And now here we are at 45. Why? Pretty crazy for materials. Why are we talking about it? Because it's the second best trade in the past week after silver. So I personally don't want to chase this with a 45 handle, considering its history. And this is not, to me, going to be the thing that goes to 50. It's not an average 2 range type of a mover. To be exact, it's 55 cents, so not massive. But for me, like to see allocation into this group. I think folks want to get any kind of exposure the copper. This is a different group, of course, but I think folks always want to get outside of typical equities and their thing of commodities, and anything tangential that touches commodities and materials would be something like that. I think this is going to sail a little bit south over the next 2 weeks, but not far. So to be very frank with you, I almost want to sell. You're not going to get a lot because it's not high volatility, but this to me is going to hold that 200 moving average right around there, which is 43.78. I think this just ping pongs 45. It heads to 44 over the next 2 weeks, and then that would be a good invitation along with a 45 half target. So, but this looks, you can tell how long this takes. This is like moving a battleship. This is going to take a lot of time to get that ultimate breakthrough above 46.43 struck from July, but they're working on it. The second best trade on the board after silver. And the number 3 best trade for the past week, the regional banks. I keep saying, how bad can things in the world and the economy be if regional banks are the 3rd best trade on the board in the past week, up 3.5%. If you recall, this hit highs on the 11th on Friday at 67.68. Here we are today, up 0.25%. We also mentioned this in the video from Friday too. I don't want to chase this here personally. I think this is going to come down to earth in the next 2 weeks, right around to that 63.5 to 64 level, right around 63.5. And I think that will be a beautiful invitation. That was an amazing candle. The up 3.5% day on the December 10th was really, really significant for this space, truly. And your ultimate support is here at the 200-day moving average at 60. And again, this is overbought, so things can take longer than you expect due to the, I guess you can call it hysteria, euphoria, but they're definitely loving it. The 3rd best trade on the board, silver, materials, regional banks. I'm not talking about semis. I'm not talking about Mag 7 stuff. Those are the best trades for the past 5 days. Worst trades for the past 5 days. Number 1, nat gas. Oh my goodness, down 17% in value over the past 5 days today. So an average of 3-ish%. Today down 2%. And this thing, when you get to Chembade, you get to Chembade very hard. We said earlier, from false moves come fast moves, and that's what happened here. That's why you always want to wait a couple of days above a 200-day moving average, really see our folks actually acknowledging a sentiment change, and you see that in the price. You don't have to slap 14 indicators on it. You'll know. So some sucker paid 17 for this on December 5th, and today it's worth 12.44. And last I checked, the 52-week low was 11.55. So now what for UNG? Does it have a setup? Is it going to cannonball the other way soon? This one I have my eye on. I'm not. To me, the time is almost coming to an end of this correction here. I couldn't find the words. I think this will bottom here. I don't think it's going to get to 11 handle, although it's possible. You got to see this start to do, if it's averaging 3-ish a day, I want to start to see this do sub 1%, and then they'll start to gobble. I don't think it's going to be up 9% in one day anytime soon. So get sort of a bottoming form here, possibly 1190. I think you'll have a dead cat bounce to that $14 level. So, which is a big move. And of course, there's like levered ETFs on this as well. I think Boyle is the one that you would do for this. So again, once things fall out at 50 RSI, they sell first and ask questions later. This thing very quickly went from a 15 handle to 12 handle. You just sell first and ask questions later. It's just the way it works, especially in high volatile assets. And you see it all across, hopefully, with the charts we looked at today. So this, I believe, will base this week. It may get very close, like 1190. I'm looking at this level from that week of mid-October, the week of the 52-week lows. But today, they closed at 7 cents off the low. They were almost upset, it seemed, that the bell rang because they want to sell more. Started to get this under 1%, and then probably very close to a sub, very like an 1190, something like that. I see it bottoming, and then it will be a setup, I think, to $14. So crazy things happening in that gas. The worst trade on the board, not even close, down 17% in the past 5 days. Sorry for you longs. Number 2, down 7%, is Ethereum. So this has not done well either. Today, down 5%. So it's not had a good level. Look at this. It got the Chembade very clean here from its 50-day moving average, unfortunately. That's not what you want to see. That is absolute weakness. And then what you didn't want to see today is it's going through the 200-day moving average after barely holding a cup of water here above a 50 RSI. So Ethereum has looked sick. it had looked constructive holding this 200 moving average since November 17th, but now I'm starting to see a little bit more breakdowns. And unfortunately, right here, just in terms of the cycles, this does not look good for the next 2 weeks. What we said for IBIT obviously goes for this. This looks like, and I hate to say it, but this looks like it wants to get to about $20 even, maybe 19.5. So it will be painful. That's going to be an ugly rejection, I think, from $26 from December 10th. You apply a typical, overlay of 15-day-ish on this, maybe 18 days because it's more volatile, possibly. And that takes it to about Christmas Day, the 28th, right around there. And I think this one's going to get similar, almost like we saw the rejection from Nat Gas. I don't like rejection off a sliding 50-day moving average. And the candles are like that. And it's the second worst trade on the board in the past week. No. This is going under 20, probably to 19. And I'm looking at SBIT and some other short areas. Like I said, I picked Rigetti because to me that is just failing in every nature. And I got out of Cypher on Friday, thankfully, because that thing absolutely cratered today as well. So this space looks bad. I'm sorry, crypto bros and sisters, but this looks like it has another 10% to go. Ethereum. So I think it's at whatever, 3,000 now. In the actual, I think it's probably headed to about 2,700, something like that. And lastly, our last loser of the past week, uranium. One of the biggest stars of 2025. Uranium, an ugly past 5 days, down 6%. Today, down 3%. I haven't been long uranium in a while, but it's always on my radar. You have to pay attention to it. This peaked in October at 60.5, and boom, a very hard move lower. Nice sticking of the landing here of $40. Your 200 days at 38. Here we are again, though, sub 50 RSI. If you look at uranium for 2025, it's truly top 5 in returns, I believe. It's had a monster year, and you get that because it was at $27 last year, and, well, it had been up a clean 2x in October, and here you are at $45. This looks weak as well. I'm sorry for the next 2 weeks. It really looks like healthcare is going to be the strength in the market. That might be it. Probably doesn't hold the market enough, and that's where you get that backwards and fill in the overall indices. Financials look amazing. Global looks amazing, but that's not ultimately going to be enough to pull the S&P significantly higher. This looks like it is headed to about 4. I want to say 40. This looks like a strong level here. This has not been sub $4 since Labor Day. But uranium wants to take a breather. I think this has a slide coming to about $41. So about another $3-ish for here, probably like 6-7%. Step out of it for about 2 weeks. And then I do think it would be worth playing for a target, though, of 51. So almost emblematic of the software stocks. Those highs for specific areas are not being revisited soon. You're looking at the UK, 2 weeks. Yeah, probably going to do it again, if not sooner. But some charts look like they have a lot more work to do. And then there's charts like materials, which are trying to etch something of their own. So always a market somewhere. Top 3 trades in the past 5 days: short nat gas, long silver, short Ethereum. Absolutely crushing it. Okay, Wednesday programming note: no longer after the ballot. We are going to do a 1 o'clock during the market day Wednesday. So join me for that. Peace.